In this video, we're going to talk about the record uranium demand that's coming. I'm going to show a bunch of charts showing you that it could be in the billions of pounds of U3O8, the demand that's very high and not really looked at in the future projections. We're also going to talk about the long-term contracts that could be starting in uranium very soon. I'm going to show you more charts and data on that. Also, the energy crisis in Europe, how we had 800% for year-over-year gains in natural gas price there in Europe, and how uranium and oil is likely next. There's an energy crisis. We're going to go over some big key breaking news. And the last thing, the overall market in the US, the stock market, where all the funds are really going, because the markets are still up, but only a few stocks are up for the month. I'm going to show you exactly which ones those are. And it is very bullish for uranium and commodities. But first, hit that like and subscribe button below. We got to get the channel up, just like we got to get uranium price up. So first thing is, I just tweeted this out a couple hours ago. It's pretty late. It's early morning, 12:36 a.m. on the 17th of December. And 70 million pounds of U3O8 uranium will be contracted again during the next uranium bull market that we're in right now. Another 400 million pounds is going to be needed if these new 160 new Chinese and Indian reactors come on. Duke Energy, they projected $2.1 billion spending on nuclear fuel. And remember, nuclear fuel, about 49% of that cost for utilities is in the uranium, the physical uranium itself. This was one U.S. company, 6 nuclear plants in the US, and 93 overall in the US will need nuclear fuel. And these long-term contracts are coming up. Now I want to show you a chart here. We're going to go over all of these charts. I got a bunch of amazing charts I really want to show you. Very excited. So this was from Kazatomproms. They said that 2021 to 2030, the forecast uncovered demand is 700 million pounds of U3O8. But this really does not account for the new SMRs coming on. This does not really account for the 150 reactors that could be coming from China and India. And this is just utilities returning back to the market. Because uranium is a boom bust cyclical market, we see these massive contracting cycles that we saw in 2005, 6, and 7 here, as you can see. And the thing about this is you notice spot volume really wasn't that much back then. We really saw the volume run in 2009 into 2010. And that really started to run up this contracting price because the volume started to get a lot bigger than we had at the peak. In spot market, we had overproduction, obviously, the megaton of megawatts program, then Fukushima, boom, everything started to stop. They were contracted pretty much fully for the 10 years plus, and we're coming up on these contracts needing to be renewed. This is US utilities, this is also European, all over the world. And if you noticed, look at the spot market volume, 50 million pounds. Okay, Sput has almost had 41 million pounds just in the last few months. That's not including utilities and what's been contracted. So we're at record highs. Last time we saw this was in the early 1990s. Not even on this chart when we saw volume like this in the spot market. Now you see all these big spikes here. It's very simple. All of this contracting is going to come back. I have another chart here showing that the Duke Energy, which is the one I was talking about earlier, they have $2.1 billion spending. They're looking at spending on nuclear fuel, and that's 2021 to 2025. Okay, so this is just a small portion of what's going to be out there that's going to be contracting. This is another nice chart here that shows utility contracting drop off and how fast next year it's going to be. 49% uncovered for future contracts coverage. And in 2023, it's 36%, then 28%, and then down to 11%. So Kazatomproms, all these big producers, they're scrambling to produce, scrambling to get new projects, things explored and find new uranium because it's going to be needed. Now, in Europe, we see the same thing, but it's a little bit less, but we still have that drop. Now, note that in the last year, even though we're up here, there are European contracts being made right now still, even though a lot of them are still contracted. Peninsula Energy was one of those. They had a European contract. They're a producer here in the United States out of Wyoming, and they are contracting. So these need to be replaced. You can see that these massive spikes, we are probably going to have 250 million to maybe even more contracted, volume for uranium. This is going to be huge. This is going to run uranium up significantly. And as you saw, Kazatomproms said that they were in an oversupply market back then. We don't have that megaton of megawatts program. We have mine, shortages. We have, shortages. They're closing down mines. Mines are, the issues because of what's going on in the, all around the world. Everyone knows what's going on. These things are all pushing up to this. Also, we're looking at inflation. Tell me that's not inflated right there. Okay, that's European natural gas. And one of the main reasons for this, it's not just the, Russia, the pipeline, stuff like that. It's all to do with closing nuclear power. Okay, I'm going to show you some other, charts here. You can see it's up 800% today. Okay, and the thing about compounding gains is every time it goes up even slightly, once you get over a certain amount, it's going to be massive. That's why this number has gone from like 400 to 500 to now 800%. Every $10 this goes up, this thing's going to go up, from here, every $10, it's going to be like 100% move. So you can see we were pretty much, everything's nice and grand, 20, 30 bucks. Now it's skyrocketing. This is not even the beginning, really. We're not even going to see, I think, the peaks yet for natural gas, and I think oil and uranium is next. The natural gas in the U.S., we had a record 12-year high here in October, a couple months ago. But as you can see, the government's doing everything they can. We've had a milder winter this year. So far, they do have surplus and nuclear power. Unlike Europe, we still have nuclear baseload power. Now, if you look at this right here, I want to show you this. This is another thing. Remember, we saw uranium and oil in tandem. Well, 600 billion barrels, Art said here, this is from Reuters. I'm going to show you the article in one sec. But about 40% of the world's recoverable oil and gas reserves could be affected by wild weather, the coming weather that we're starting to see. And that's really what's the reason why a lot of this is happening. And this was out a few hours ago from Reuters, and pretty much of the world's reserves of oil and gas is under threat. They're saying rising tides, storms, floods, extreme temperatures, all caused by this climate change, whatever you want to call it. And there's big risk because of that. We're starting to see a lot of these countries, we'll go back to this one, you can see that there's extreme risk all over the world, this red here. And a lot of countries, we're seeing a lot more than others. And a lot of these countries, they're starting to see nuclear power as a more viable option, especially small modular reactors. And this is very alarming. If you're seeing this energy crisis play out, energy prices are going to continue to skyrocket. We're probably going to see these companies have to raise their prices. We're starting to see massive amounts of, just all over the commodity sector. We're seeing just massive runs in everything. The prices and everything pretty much are going up, and uranium is going to be the one that needs to catch up. Okay, these contracts are going to have to start very, very soon. If you see here, I got a chart here as well. Really nice chart that shows pretty much all the countries, what their carbon intensity is. And the darker this is, the worse off it is. And the more that they close these nuclear plants, the more issues they're going to have. They're not going to be able to reach their carbon goals. So I see a lot of these coal plants being transitioned to nuclear plants in the future, maybe, 5 to 10 years down the road. A lot of this is what's really happening out there. You're starting to see it. Wyoming, Bill Gates, and they're starting to churn a lot of these coal plants into these new small modular reactors. So I think this is going to be the future. We're seeing a lot of issues there in Europe, and their carbon goals, they're not going to meet them. And you can just see here the countries, with the green, they're starting to, they either have nuclear power in the forefront. A lot of the U.S. is not on here. Obviously, California, they're going to be shutting down a nuclear plant, and this is going to, probably go, a lot higher because they're not going to have that. They're not going to be able to reach the carbon goals unless we get these new small modular reactors. That's not even in this demand chart. Small modular reactors is not even really on this demand. Neither is transitioning a coal plant into this, as well as we're not even talking about renewals around the world. A lot of these companies, utility companies, after I've been reading their annual reports, they're looking at getting renewed contracts or renewed licenses for these nuclear power plants. This is massive for these companies. This is massive for uranium. The demand could be 300, 400, 500 up here million pounds. contracting. Could be higher. And I really want to show you, this is pretty interesting. Kevin Bambro, you know him. He said, we are about to have, he commented on my tweet, a couple hours ago. He said, we're about to have a 5-year run that will average 300 million pounds of contracts of uranium per year, maybe even 400 million pounds this cycle for 6 to 7 years. And he says new builds must be fed. Now, what's crazy about this is, this is a lot more than we're seeing. 400 million pound a year. This is massive. And what do you think this is going to do to the uranium price? Kevin predicted this long before anyone. He came up with the Sprott Physical Uranium Trust. And he's talking about, and I showed him the chart there with natural gas. And he's saying, that the megawatt per hour, it's, so expensive there in Europe. It's crazy. And he says, look at the long-term contracting numbers during the run-up. That's what's coming. Ignore the noise and get long as you can. And I posted that, which is pretty cool. Kevin sees what I see, and this information's out there. It's free. Yet people want to, deny the fact that we're in an energy crisis. They might want to deny the fact that, these contracts, because they're so long-term and cyclical, the market's been beaten down. So many people were diluted out, so many negative people out there, so many people's jobs possibly depend on this. A lot of people don't even understand nuclear power, but it is the future. It is the only way we're going to get to carbon goals. And all of these massive blue lines, 250 million pounds, in 2005, all of this will be contracted soon. The writing is on the wall, the elephant's in the room, and uranium, look at this. They're literally right out there saying $2.1 billion. Okay. And by the way, I want to show you, this was Duke Energy. This was at their end of year last year. So I want to show you the price actually right now. The price back then, of uranium, it was $29. Okay. This was this is my Discord. We keep track of everything. This was back in November. So we were at like $29. So if you see this, this was, an undershoot what they're talking about. So if they're looking at $2.1 billion when it was that cheap, if they have their heads in the sand, then these utility companies are going to scramble, and the price is going to be, they're probably looking at double that. And if you look in, Duke Energy and any of these companies, annual reports, you'll see this. Dominion Energy purchases nuclear fuel primarily under long-term contracts. Dominion Energy is exposed to nuclear fuel volatility for the portion of its nuclear fuel obtained through short-term contracts or the spot market, including a result of spot market supply shortages. That's what we're seeing. Nuclear fuel prices can be volatile, and the price that can be obtained for power produced may not change at the same rate as nuclear fuel costs go up, thus adversely impacting Dominion Energy's financial results. In addition, in the event that any of the contracted generation facilities experience a forced outage, Dominion Energy may not receive the level of revenue it anticipated. So you're starting to see these companies, just plainly tell you that and by the way, these companies, if you look here, the companies, this is the last thing I want to show you guys. In utilities, this is the 1 month chart. Okay. So the money has been flowing into utilities. Okay. Massive amounts of money. These are big companies that make a lot of money. Look at this. Duke Energy there, 5%, for the month. This is big for, it's $104 a share. So money's flowing here over the month. We also see Apple here, a lot of money flowing there. That's $3 trillion market cap soon. Healthcare, obviously, why people are pumping money in there. And, the pretty much real estate and utilities. So this is big. This is why we're starting to see, I think in 2022 is going to be the massive run for uranium, for oil, and we're going to see that run in tandem. And the writing's on the wall. Natural gas is up 800% for the year in Europe because they're turning off these nuclear power plants, because they're trying to meet these carbon goals. And there's weather and energy crisis because, this type of thing is very a fragile market. Okay, the energy market, and we've kind of built ourselves on a house of cards. Uranium is no different. In fact, uranium is even worse in the fact of supply shortages that we're going to see. The house of cards we built there, the contracting, in my opinion, they're going to be millionaires and even billionaires billionaires made in this energy bull market. Even if the overall stock market goes down, crashes, whatever, money will flow into commodities, in my opinion. Remember, this is not financial advice, but please, if you like this channel, hit the like and subscribe. And if you want, go check out my Discord, my Patreon, if you want to support the channel. I do all this for free, you know, on the channel. I don't put out, you know, I don't sell courses. I don't do all that type of revenue. You know, my videos don't even get that much views. So if you guys want to support the channel, go there. I put a lot of time into this, and I really do hope that a lot of people enjoy this. You know, I don't have that many subscribers, but I'm going to continue making these because, you know, a few people like them. So really appreciate, you know, the channel support over the last couple years. And I'm very excited for 2022 for uranium. It's looking very good. And until next time.